Welcome back. As the COVID-19 pandemic continues to take its toll on global economies, countries across Africa face or have been projected to face a complete collapse of economies and livelihoods unless the spread of the coronavirus can be controlled. More than half of Africa's 54 countries have imposed lockdowns, curfews, travel bans, or other measures in a bid to prevent local transmission of the virus. But what are the implications of these for Africa's largest markets? I'm being joined by the senior analyst Sub-Saharan Africa at Docker Frontier London, Matt Kinniger, to answer this question. Good afternoon, Matt, and thanks for coming on the program. So Ghana and Cote d'Ivoire have been some of Africa's fastest growing economies in recent years. So how will the COVID-19 pandemic and global economic slowdown affect these countries this year?
Yes, well, thank you for having me on. So certainly both these countries were expected to be some of the fastest growing economies in Africa and also the world in 2020 before the global economic slowdown and the pandemic took effect. So we are expecting weaker growth in both these economies. Unfortunately, neither Cote d'Ivoire nor Ghana, two of the major West African economies, will see the growth that we were previously forecasting of around about 6 to 7%. In 2020. So both countries will see a bit of a slowdown this year. And this is mainly because of slightly slower foreign direct investment as economies in Europe, North America and Asia slow. But there's also going to be a number of adverse impacts from the coronavirus containment measures that governments are introducing. So lockdowns, curfews, for example, this will definitely have an effect on these economies. So we're definitely expecting some weaker activity in these economies. However, nonetheless, you may be surprised to hear that Cote d'Ivoire and Ghana will probably be more resilient compared to other African economies during the pandemic and during the global economic slowdown. And this is for a number of reasons. Both countries have a relatively diversified export base. In the case of Ghana, it actually exports quite large volumes of gold. And gold prices have actually increased as a result of a flight to safety by investors around the world. So Ghana could benefit from that. Both countries also have elections this year. And so we are expecting the government to prioritize spending on civil service wages, which will mean that the consumers in the country will benefit from a sort of less of an impact from the global economic slowdown. So this will support economic activity to an extent. And also, very importantly, both Ghana and Cote d'Ivoire, the governments in both countries have the fiscal capacity to stimulate economic growth if necessary. Interest rates are falling in both countries. There is room for stimulus. So although we are expecting growth to slow in both these countries, there is more scope for the government to actually counter the impact of the global economic slowdown.
But unlike Ghana and Cote d'Ivoire now, Angola had endured a weak growth recently. How will its economy manage the recent fall in oil prices?
Yes, so Angola really is being struck from both sides. One in terms of the decline in global oil prices and the other in terms of the coronavirus pandemic. So in terms of the impact of the oil price decline, it's not good news for Angola this year. This will have probably a much bigger impact on its growth outlook than the effects of the coronavirus pandemic. And this is because the government is extremely dependent on oil for its revenue base, and exports are also largely from oil. And so this means that the government has been forced to revise down its budget this year, and foreign currency reserves are also likely to decline in 2020. So we are now here at Docker Frontier forecasting a decline in GDP growth to minus 2% this year. This is a major setback for Angola because this represents the 5th consecutive year of recession. It also means that although the government has introduced very draconian lockdowns in response to the coronavirus outbreak, it is not able to introduce a stimulus, either fiscal stimulus or monetary stimulus, to compensate for the effects of these lockdowns. So it generally is quite not very good news in terms of growth outlook for Angola. I would say, however, one of the silver linings for Angola is that the central bank has been very pragmatic in allowing the kwanza to depreciate in response to the decline in oil prices. And this does mean that investors will be more enthusiastic about the market once the pandemic is over. But also it means that access to foreign currency for local companies in Angola will be better than it was in previous years.
What about a country like Mozambique? Now, 2020 was actually going to be a much better year for that country after a difficult 2019. But do you still expect things to improve this year?
Yeah, so 2019 was a particularly difficult year for Mozambique. The economy barely grew because of the two cyclones that struck the country, very devastating cyclones. And there was a lot of political uncertainty around the election last year. 2020 was meant to be a much better year for the economy because of an increase in investment into the gas sector. Also, a lot of investment is planned to go into infrastructure reconstruction after the cyclones last year. Now, we do expect those investments to continue this year, so that will mean that growth is probably going to be higher this year than it was in 2019. However, there are a number of risks to the outlook. So one is obviously the coronavirus pandemic that will mean that export revenues this year will be weaker. Mozambique exports to Europe, India, China. So those markets are all expected to see weak growth this year. But very crucially, we are increasingly concerned about an escalating insurgency in the northeastern province of Cabo Delgado, where most of the gas investments are taking place. And in the event that this insurgency escalates much further, we could see a slowdown in investment into the gas industry, which could derail economic growth this year in Mozambique. So it's definitely something to watch this year.
Senior analyst, Sub-Saharan Africa at Dhaka Frontier London, Matt Kinniger, thanks for sharing your thoughts with us.
Thank you very much.
The African Union has warned that Sub-Saharan Africa's biggest oil producers, Nigeria and Angola, could lose as much as $65 billion in income due to the coronavirus pandemic, which has led to a plunge in the value of crude exports in the past weeks. In a study titled Impacts of the Coronavirus on the Africa Economy, the AU says African oil exporters are expected to see their budget deficits double this year, while their economies shrink 3% on average. The AU researchers expect Africa's GDP to shrink by 0.8% this year, and up to 15% of foreign direct investment could disappear. The report also notes that about 20 million jobs are at risk, as governments could lose up to 20 to 30% of their fiscal revenue, estimated at $500 billion in 2019. Indonesia's annual inflation rate rose to 6.2% in March from 5.8% in February, and this is the first rise in 6 months. The country's annual inflation rate dropped to its lowest level since October 2017 in February. Indonesia now expects an economic recession due to the impacts of the coronavirus pandemic, prompting the central bank to cut its key interest rate by 100 basis points last week. And the Democratic Republic of Congo has cut its 2020 economic growth forecast to 1.1% from 4.1%, and that's due to the negative impacts of the COVID-19 pandemic. The country's central bank explains in a statement that the pandemic has caused global trade to slow, causing countries across Central Africa to slash growth projections. The DRC is also one of the countries receiving the first set of emergency support from the World Bank, with $47 million provided to put in place containment strategies for the coronavirus, train medical staff, and provide equipment to ensure rapid case detection and contact tracing. And that's where we end today's program. Thank you for watching. I am Bisi Adebayo.